Assalamu alaikum. Welcome to Investors Education Series by PICG. Today we will be covering a very important topic, stock trading in Pakistan. My name is Talha bin Hamid. I am a chartered accountant by profession and currently I am heading the Director and Training Development function at Pakistan Institute of Corporate Governance. Through this short video, we will learn some key concepts and guidelines about stock trading. We will also learn about regulations and safeguards around this mode of investment. What are the advantages of stock trading? Potential for high returns. That means that when you trade in stocks or when you invest in stocks for the long term, a good stock has the potential to give you a return that may be over and above the rates of return in other modes of investment. It also allows you to diversify your portfolio. For example, if you have money invested in advances, in fixed deposits, in mutual funds, then stock trading adds another flavor. And that means that through diversity, your portfolio will be comparatively safer from ups and downs in one of the sectors. Liquid and accessible. Any investment that you make in the stock exchange is accessible to you at all times. For example, you will be able to sell your shares at any point in time. That is because PSX works round the year. It is always open for you to trade. And finally, if you decide to hold on to the shares of a company for the long term, you become its owner and you have voting rights. That means that crucial issues like directors election and approval of accounts, appointment of auditors, performance monitoring, all those rights can be exercised by you through your voting rights. Like every investment, stock trading has its risks too. First of all, market is volatile. It can respond to any of the factors. For example, economic factors, political factors, geopolitical factors, developments in a specific industrial sector, or even a scientific advancement. Therefore, through that volatility, stock market has the potential for high losses. If you invest in a large portfolio and that portfolio loses its value, then for the near term at least, you will lose your investment. Economic and political uncertainty is always there. It is true for the entire world and it varies from country to country, but everything that happens economically or politically, or even between countries, between blocks, that has the potential to affect the stock market and the value of your share. Lack of guaranteed returns. A term deposit or a government security has a guaranteed rate of return, but stock market does not. And that is one of the major risks of trading in stock market. Key players who facilitate trading. The exchange of share takes place through the Central Depository Company or CDC. It handles the settlement, payments made or received for the shares bought or sold. NCCPL, National Clearing Company, ensures the settlement of transactions and manages the clearing process for stock trades. And the third vital component are the brokerage firms. Investors buy and sell stocks through brokerage firms. These firms act as intermediaries between investors and the stock exchange. Now, how does buying stocks work? First, you decide which company's stock you want to buy. And you need to conduct research based on their financial health, growth prospects, and industry trends. Remember, researching a stock is your responsibility and no one else's. You need to open an account with a brokerage firm. These firms act as intermediaries between you and the stock exchange. Think of them as agents. Thirdly, you place an order with your broker specifying the number of shares you want to purchase and the price you're willing to pay. The broker then executes your order. If someone else, usually another investor, is willing to sell their shares at the same price or lower, the transaction occurs. Why do we have brokers? First of all, brokers are the only ones licensed to trade shares, and in the process they also earn a commission. But trading through a broker is also beneficial for investors because that way brokers can advise their customers on which stocks to buy and whether the investments they are making are wise. Again, nothing is guaranteed, but that's a value add that brokers provide. Now, what if you want to sell your stocks? How do you do that? First, you decide to sell your shares of a particular company. Secondly, you place a sell order with your broker. Instead of a buy order, you place a sell order specifying the number of shares and the price that you want. When another investor is willing to buy your shares at that price, the transaction occurs. And after that, you receive the proceeds from the sale. What does trading stocks mean? Trading refers to the continuous buying and selling of the stocks in stock market. So when you buy a stock and you sell it immediately and then you buy another from the proceeds, that is what trading is. Traders aim to profit from short-term price movements. So for example, if you're monitoring the price of your share portfolio, that means that you're constantly looking out if the price is likely to rise or if the price is likely to fall. If the price is likely to fall and you hold the shares at a higher price, then you may want to sell them. Similarly, if the price is rising, that may be a good time to invest in a share. Day trading. Some traders buy and sell stocks within the same day, and that is their entire business model. Technical analysis. Traders use charts, patterns, and indicators to make trading decisions, and that is where the advantages of trading through a broker come in. You will have access to a whole list of tools to make wise investment decisions that you may not have developed yourself, but thanks to trading through a broker, you have that service. And finally, risk and reward. Trading can be lucrative but also involves higher risk. For example, if you buy a share and you sell it within the same day, and the next day the share gains some more value, that means that potentially you have lost the profit by selling it the previous day. Also, the cumulative results of trading may or may not be higher than holding on to that share for a year or so and cashing in on the dividend. So that all depends upon the company's health, its profits, and the overall economy, and a lot of factors. But if you are into trading, that means that you need to be ready for rapid profits and losses. Now, what are some of the important considerations in trading stocks? There are two: fundamental analysis and technical analysis. Fundamental analysis involves examining the underlying company's business and conditions within its industry or the broader economy. Metrics like earning per share, price to earning ratio are analyzed. In technical analysis, on the other hand, it focuses on the statistical pattern in stock charts to predict future price movements. So, the fundamental analysis looks at the fundamentals of a company. How is it operating? What are its profitability levels? How is it geared? And what is its financial health? Whereas the technical analysis is more focused on the movement of prices, and that is used to predict the future patterns. What are SECP's guidelines for capital market investors? Securities and Exchange Commission of Pakistan, the primary corporate regulator in Pakistan, has issued some guidelines for investors, and they can be very beneficial for even new investors or experienced investors. First of all, always deal with a licensed broker registered with SECP. Your investment with the unauthorized broker is at risk and prone to fraud. You may lose your hard-earned money in the hands of unauthorized brokers. PSX and SECP will not entertain your complaint if you deal with an unlicensed broker. You can verify the registration from the website of the Pakistan Stock Exchange. License verification can be also made by Jama Punji SMS license verification service. For verification through SMS, send LV to 8181. So those are all the tools through which you can ascertain the viability and the credibility of a broker. Secondly, trade through only your own accounts with the brokers and CDCs. Your investment is not secure if you trade through account in the name of someone else. You are also at risk as you are not the legal owner of your money, and you are prone to fraud if you are investing without having brokers and CDCs accounts in your name. Broker may misuse your money for churning in the market for his own benefit. Since it's not in your account, you will not be able to question them. Only legitimate owner and account holders can file claim in case of default of broker. And SECP will not entertain your complaint in case you traded through third-party accounts. Carefully complete your account opening forms and obtain their copies for your record. Ensure that your contact details like address, email address, and cell phone are correctly recorded in the account opening form. Thirdly, never authorize a third party to operate your account. The authorization given to someone else to operate your account on your behalf can be misused. Authorized person may cheat you for his personal gain. Your money can be used for churning, and your claim once again will not be entertained by the broker or exchange in instance of misuse of such authorization. It's just like handing over your ATM card to someone else and telling them the PIN. SECP will not entertain your complaint in case of any loss due to third-party authorization. Fourthly, always make payments to broker by cross-check and obtain receipts. You may be cheated if you make payment through third-party checks. Do not pay cash to broker. Payments through cash is illegal, and SECP will not entertain your claim in case of default or broker. Always obtain periodical statements of account from your broker and compare them with your records. These days, most brokers will send you statements of account yourself without asking, and it is your duty to routinely study them. It's just like reconciling your bank statements. Always maintain documentary record of your business transactions so as to protect your hard-earned money. In absence of documentary evidence of your business transaction in the stock market, you may not be able to substantiate your claim or complaint against broker. Do not sign any document without fully understanding its terms and conditions. Carefully complete your account opening forms and obtain their copies for your record. Never forego obtaining all documents of transactions in good faith. So never do anything in good faith. Always have documentation complete. Give orders either in writing or on recorded telephone line of the broker so that the broker cannot manipulate or misuse your orders. Always obtain periodical statements of account from the broker and the CDC and compare them with your records. So it is vital to maintain your own records as well. Obtain copy of schedule of charges, applicable fees from the broker for your record. You are at risk if you are not receiving trade confirmation within 24 hours from your broker of all trades executed in your account. Number 6. Never transact on tips, insider news, rumors or media reports. Investment on the basis of rumors, media reports or tips may lead to loss of your hard-earned money. Insider trading is a criminal offense, and if it is proven that the tip that you got wasn't supposed to make it to you, that prosecution and that may lead to imprisonment for a term which may extend to 3 years or to a fine which may extend to rupees 200 million. Or 3 times the amount of gain made or loss avoided or loss suffered by another person, whichever amount is higher. So be prepared to be jailed and lose your money if you do insider trading. Always check financial statements of a company prior to making investments in its shares. Do not transact based on media reports, rumors, tips or promises of guaranteed or higher return. Take your time to research the stock before you invest. Never trade on social media tips and where the recommendation is claimed to be based on inside or confidential information, because that may also incur legal liability on you. Exercise extreme caution regarding social media posts, messages that solicit an investment or provide information about a particular share because a competitor may have planted it. 7. Always maintain custody and complete control over your securities. In case of default of broker, your investment will not be safe. Open an account with CDC's Investor Account Services and subscribe to CDC Online Services for authorizing all portfolio transfer from your account. Use CDC's direct settlement service and settle your trades through the IAS account. And finally, the investors are cautioned to avoid making an investment decision on basis of a research report issued by a person or entity not notified by SECP. The list of research entities duly notified is available on SECP's website. Go check it out. You may authenticate notified research entities with the Jama Punji SMS service by sending REB to 8181. So these are all the tools and the cautions that SECP has prescribed. And if I were to summarize them, it would be that first of all, be cautious, do your research, do not rely on tips and rumors, only conduct business in a thoroughly documented manner through legal accounts, through legal brokerage firms. Always rely on information from entities that are licensed for this purpose by SECP. And if you fail to follow any of these guidelines, then there may be financial penalty or even jail time. Remember, investors, ignorance is not an excuse. It is our duty to educate ourselves, read the law, and then make wise decisions. I hope you enjoyed this presentation. This is meant to be just a summary of the considerations and the strategies and the legal guides around the process of stock trading. For a more thorough understanding, be sure to check out SECP's website as well as laws and regulations that are covering the topics mentioned in this presentation. Thank you so much and see you all again.